Okay. All right. So we're underway here. So San Diego Traders Group for December last month of 2023, another fast year. So welcome all to the meeting. As if you read the reminder, we've got two presentations on tap, hopefully. um, First one is by nobody, that infamous person that your broker has told you is not able to time the market. So nobody is going to show you how he actually does time the market. So without any further ado, I'm going to turn the meeting over to nobody.
Okay, well, until all that gets going, I'm going to do a bit of a presentation here, John. Here's what it is, guys. I went to an event, and rather than trying to push who I am and stuff like that, I tell them, look, what I do for a living is I do what nobody can do. And so we'll take a look at some of these things. In terms of what I promised nobody would show you, this here is an S&P chart, as you may know, and this is where the last buy signal took place. Now, the question is how can a third grader with no computer skills and simple math knowledge know that this is a buy signal? Well, you take what is called the 100-week moving average and the 50-week moving average. And when you get the crossover, in other words, the 50-week crossing above the 100-week moving average, you have a buy signal. And we only really tested it out on SPY, but it hasn't had a losing trade in over 95 years. So, whenever it has a sell signal or it goes the other way, then it means getting out of the market. So when was the prior buy signal? Well, the prior buy signal was about a month or so before Trump was elected. We're talking when he was running against Hillary, not when he ran against Biden, as some people think he was actually elected. Anyway, but in the election versus Hillary, right before it, that's where you had your prior buy signal, and here's where you had your other buy signal. So this is the condition that we have right now. Okay, so that's how a third grader can time the market, simply by having a 50-week moving average and a 100-week moving average on SPY, and that's it. You can go back and test it out, and you can look on Trading Alpha. I think that's the website. There was some guy who wrote an article about it right before Trump got elected. So that's what we have going on. One of the things that I think is really important when anybody does any of these presentations is that they show actual trades in the form of how can I put it? Actual brokerage statements. What are their recent positions? Are they actually making money? Stuff like that. And if you look at my prior two presentations, you'll notice that happens to be one of the features that I like to have. And somewhere along the way here, I've got a thing of what I'm actually long right now. As you may know, last time I did a presentation, I was really big on gold, and we all know what gold has done in October and November. So my last presentation was in the beginning of October, and I'm sure John will be happy to get you the link to that particular presentation. One of the things that I'm known for is the Andrews rules, which I don't use in my personal trading very much. And this is one of the concepts that Andrews taught. And he simply said, after prices zoom through the median line, they eventually return to it and then go further in the original direction. And this is one of the very reliable Andrews rules. So, but this is what people who like to time the market without using a computer and simply using graphs often like to use. One of the things that they don't teach you out there is that is about prices turning at the median line. A lot of people think that when prices are going to get to the median line, they're going to reverse. Well, I've got news for them. If prices make it past an upsloping median line, like you see here, and you'll quite often have a downsloping 2P line. Once they make it past the upsloping median line, the probability is very high that they will make it past that 2P line. So this is an hourly chart of Thursday at the end of the day. And yeah, it was true there. And you can see this on a fairly regular basis. So if you want to develop your own skill set on how to know when the market is going to do something, or micro scalping the market like some people like to do, theoretically, because it has less risk. I'm not so sure of that in the long run, but this is a tool that perhaps you could consider. So, and it's fairly easy to use, and you can use it with most charting platforms. Now, if you ask any broker, you'll know that nobody knows when the market will turn. They are very good at telling you that. And of course, that means you have to go to them for advice. Now, for years, I taught the skills of a nobody, which was effectively to find pivot points. And the advantage of being a nobody really only works if you have high status. And status only works when you have education, accomplishments, communication ability, assets, lots of assets, and good skill sets. On the other side, there's just fame. If you go into my office, you'll find that there's an article about me that was in the Wall Street Journal. And I've got a whole book full of articles about stuff I did with computers way back then. The problem with fame is you're somebody temporarily, and it's just a flash in the pan. And the name of the game when it comes to trading is to really become a nobody. And to be a good nobody, you've got to be really quiet when it comes to market forecasts. I mean, like telling no one what you're thinking the market's going to do in the future. Actually, the only thing I tell people is I know exactly what the market's going to do Monday and Tuesday. And then I slowly pause and then tell them, hey, it's going to fluctuate. I know for a fact the market is going to fluctuate. And because I don't like to be wrong. And another thing is that I personally feel very guilty if I give somebody a forecast on something and then it doesn't work out, or if I change my mind. And if you have that personal conflict in your trading, that you're feeling guilty about communicating to somebody and then not giving them an update or all that kind of stuff, it can really get in your way. And once upon a time, I was trained as a psychologist, and I find that it's really, really useful to know or to understand group behavior. And to me, the most important rule from Dr. Alan Andrews, who I learned this stuff from, is to buy after a decline and sell after a rally. Now, you need to make some kind of personal judgment as to what size decline you want and what size rally you want. So personally, I prefer the ones that occur after like a 52-week or a lower low than the whole year or something like that. Those are kind of fun. And because at that point, when you get that kind of a decline, and it also shows the other things that the decline is over, you often get a really nice pullback that goes the other way for 15 to 60%. And I'll show you kind of the stuff I've been to. These are actual positions that I have as of Thursday morning. No other positions. Okay. So for example, I'm long wheat. Now, I could be long wheat in the futures contract, but in this case, I mainly went long wheat in what's considered the ETF. I'm also presently long VAC, which is Marriott's Vacation Worldwide. And that's up reasonably nice, and PNM Resources. And so based on my system, the likelihood is that prices will go up a significant amount until my, hey, get the heck out of here indicator. And my get the heck out of here indicator depends upon, once again, having something that tells me the market is overbought or oversold. Well, in this case here, it'd be overbought. So, for example, at the last presentation I did, I was really gung-ho on gold. And so what did I do? I wound up taking the ride up. And as you know, from last October until at least the end of November, gold did rather nicely, as did gold stocks like GFI and BTC. And so here we are. Now it's time to be in something else. And these were all the positions I had as of Thursday morning. Let's take a look. Okay, one of the things I do in addition to trading stocks, which in some cases are ETFs, is trading futures. And the advantage of futures is mainly so that I can, with very, very low risk, enter a position that can hand me a handsome profit. And I can super time it. So for example, here you see I'm long an ETF, which is Canadian dollar. And here you see Canadian dollars futures contract. And the benefit is I can super time it. So it's just a lot easier, and it's incredibly low risk. And I mean, it doesn't make a ton of money, but it does pretty good.
So Ron, I gotta ask you a quick question there. Well, how do you define super time it?
Super time it. Well, super time it. Okay, in order to use the indicators in for ARE or VAC or those others, or the stocks or the gold stocks and stuff, is I'm looking at weekly and daily charts. And so after looking at weekly and daily charts, I can super time it by looking at the intraday charts. And it's a whole different, I explain it, except it's a whole different mindset looking at these guys here and looking at intraday charts. And I only look at the intraday charts after the weekly and daily have told me, hey, go for these guys. This is the one to go for. And so the only one I was long was Canadian dollar. And so, and here's what happens is on the Canadian dollar, the futures contract, I wound up, I mean, I'm long this guy, and I had to switch over. I wound up switching over on Friday to the next month, which is the March contract. And what I'm looking for is for the signal that I have in FTC to be going for an exit. So anyway, bottom line is I can go in there with a very tight risk and a nice reward structure. And also if you look at here, one futures contract, which really ties up a couple of $1,000, is a lot more profitable than putting up $50,000 in this position here. So I've got $50,000 tied up, I guess, or maybe, yeah, whatever I have. Let me see, cash. Yeah, I've got. Yeah, these are this here is one account, and this area and above is another account. So I've got $50,000 tied up in this thing here, I guess, and And in this one here, I've only got $2,000 tied up. So it's just kind of neat that I'm able to actually make more profits from this little futures contract than putting up $50,000. Now, remember too, that in one futures contract, you're controlling $100,000 or something like that. So that's why you're able to make those mega profits. So what do I look for? What I look for are proprietary patterns, actually, mainly one, that are highly probable to produce a preferred outcome. And the outcome is for an indicator to trigger good enough for a profit indicator. So I'm looking, my objective is to get to a point where I get a sell indicator saying, hey, look, it's good enough to take profits here. Go ahead and take profits. And so that's my outcome. But anyway, I wind up, when I initially get in, I can see that it can be a 6%, theoretically, a 6% or a 60% move in whatever that take profit indicator says for that stock. And I can tell you that in the currency one, it only looks like it might get 6 or 8%, and that's only if the Canadian dollar jumps up dramatically in the coming days or week, which I doubt it will. So I'll probably get a smallish return. But if I can get those consistently without having a bunch of losses, it's really nice. Now my trades that I do, they last an average of 3 months. Now, as you know, in the gold trade I did that I presented last time, I wound up probably significantly less than that. And what I've done is I've done some research, and I found that I can probably get between the S&P 500 and the S&P 400, I can probably get an average of 50 trades a quarter. And recently I did some, for the longest time, I was only looking at long trades. And so this week I was looking at this and saying, wait a minute, what about short trades? And what I found is that I can also get short trading signals. The problem that I personally have with short trading signals is when you get in, you automatically lose some money. And where you automatically lose some money is you do these stocks and they start charging you interest or whatever it is they charge you for borrowing those stocks. And so what I'm going to have to do is probably once in a while go to that other meetup group that you mentioned and go take a look at what they're using and maybe get some ideas as to going in there and actually being a net seller of options. So when I get one of my signals that says, hey, time to go short on this guy here, rather than going short stocks, maybe I'll wind up doing options. So that's where I'm at in this stuff here. Let's see. Whoop, 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 whoop. That's all I can do.
Just to make a comment there that I'm not an options seller, so I don't know exactly what the numbers are, but I know that you do have to have there's a certain amount of risk that you're taking being a writer, and you got to have enough margin in your account. They do, it does take up some of your available cash. And I don't know if anybody else has sold options. I've never sold one, so I'm the sucker on the other end of it. I'm the buyer. So maybe somebody else can give you some information about how much it's going to cost you in margin in order to sell an option.
Yeah, that would be helpful. I have tons of cash, so I don't worry about that. And as you guys know, right now I'm getting 5%, so That's good money.
I have a something that might help. So if you're selling a naked option, like if you're selling a naked put,
Yeah.
on a stock, generally, if you have a margin account, well, you have to have a margin account to sell options. You have to have enough cash to cover 20% of the purchase. So if your put forced shares that you put to you, you have to have at least 20% of that cash in your account. So that's how much margin they'll tie up.
Oh, that's not bad.
Yeah. And then you can minimize that with spreads. So you can, like, if you sell a put, you can buy a put further out. And that, I mean, the most that stock can go down is zero, right? So your max loss is if it goes to zero on a naked put. Um, you can mitigate that with with making a vertical spread. On short calls, I think it's the same, but on some of these, it also, unlike on futures, the margin requirements change on options. So if you're short options on futures, your required margin will go up and down on a day-to-day basis.
Yeah, what I'm looking at is being short calls, I guess. So you're saying that I'm going to have 20% of whatever the underlying is value of that,
For
or more.
stocks, yeah, that's generally how it works. Yeah.
Oh, okay.
But they
Well,
could, if it gets stressed, if that position gets stressed, they could require more margin and you get a margin call.
not a problem. The now if they for the 20%, does it have to be in their cash, or can it be in like in at Fidelity in their mutual fund, which it's not a mutual fund. I'm sorry, it's their money market, which is effectively T-bills.
Yeah, I think if either cash or cash equivalent, it's in the same brokerage, I think that would probably work too.
Okay,
Depends on the broker, of course. What I
yeah,
would do is
that's not a problem.
I would take your brokerage platform, place an order for short call or put, and then to see how much margin or buying power is going to tie up before you
Cool.
place the order. Yeah.
Now, what I do is in terms of the mechanical system that I use is as crazy as this sounds, because I don't have the software completed for my use right now. Is I'm just using a simple platform like Thinkorswim, and I'm just looking for here. Let's see if I can bring that up. No, it's installing updates. Oh, whatever that was worth. Okay. Apparently Thinkorswim is not working right now. But what I simply look for is something that's probably made a recent low. And so I'm looking for the price to be ideally to be lower than the low of the last 30 or 40 days. By the way, in Thinkorswim, you can't program that. It will not let you do that. Crazy as that sounds. Or than the prior 30 bars or weeks or whatever. It won't let you do that. But it will let you look for if the present price is within 2% of the last 25 or 50 days, or it can be bars rather. And that so I wind up using that as it's my desperation indicator. Because otherwise, what I need to do is I need to look through the S&P 400 and 500, because those are the two groups I use. And rather than look through all those stocks, that's really mind-bogglingly annoying. I only want to look through a few on a daily basis, and that's how I solve that problem. So if you just take your time, you can solve those problems. Very often find a way. Let's see. Well, we have a comment here. It says, right now with VIX at 12, the premium you are getting for selling options is not as high. Okay. I guess there's a correlation between, or in some things between the VIX and premiums that people get.
Yeah, I just priced out. I'm in Interactive Brokers. I have a portfolio margin account. on Apple. I priced out an at the money put for 6 days out. So that would, if I got put those shares, I'd have to pay, the strike is 197.5. So if I was put those shares, I'd have to pay $19,750 in cash. But the margin impact is 3170, which is 16% of that purchase price.
Oh, okay.
Now the call I
Okay.
can't do because I own stock in Apple, and so it skews them. It's going to require less margin because I have shares in Apple. I should have picked a stock I don't own, I guess. I could pick a different one if I want, but let's say I don't own Tesla.
Well, one of the things that remember I'm looking at in terms of my system is I'm looking for something where I might not get kicked out for 3 months. So I guess I would need to have a put that I'm selling or a call that I'm selling rather. That's 3 months or so out there.
Yeah, so if you don't want to use stop, like options are interesting. If you don't want to use stops, the worst thing with stops is it goes down your stops you out and turns around, right? It's so frustrating. But with puts, you can just buy a put at that level, or if you're long, you buy a put, or if you're short, you buy a call at your stop level and just hold it, and you won't get wiggled out. But now unfortunately you have to pay a premium for that. That's the other side of the coin.
Well, as simplistic as this is, all I'm really looking to do at this point is test out the idea of, okay, if I have a sell signal in Apple or whatever, I would then be looking for it to go down for 3 months, let's say, and
Mhm.
I could guesstimate about where that would be. I could guesstimate about where that
Mhm.
downside target would be, and to simply take the downside target and 3 months from now and look that as a possible put to sell. I mean, would I be looking? No. Yeah. I'd be looking to sell a put. I guess that'd be a deep in the money. Oh no, I'm a call to sell rather. That's a deep in the money call, I guess, if they're even available.
Yeah, there's a lot of way. I mean, so many options with options. What direction? If you have a direction and a target in mind, I like to do
Yeah.
butterflies. So what I do is I create a butterfly, and the meat of the butterfly is my target, and so that's where the max profit is. So you can set up butterflies that can pay off like 10 to 1 or even 20 to 1. Um, if you're really confident in your target, you can risk less and you can risk a little and make a lot.
Okay. Now, could you explain what the hell I mean, I know a butterfly is a multiple option position, but could you explain a little more about that?
Yeah, butterfly is essentially, so let's say you're targeting something to go down, right? And right now it's say 150, and you're targeting, let's say 120. So you think it's going to go to 120 in maybe say 3 months. So what I would do is I would buy a put butterfly. So I'm buying a put. It's probably, I'm gonna have to price it out, but you can maybe buy a 130 put, and then your target was 120. So I'd buy a 130, sell two 120s, and buy a 110. And what that it does is that all that you're selling, since you're selling two contracts at 120, that helps pay for that long put at 130. And then you have the 110 put you're long just in case it keeps running down. You don't want it to, because otherwise you'd be short a naked put at 120. If it keeps going through that, you're in trouble. So the 110 is just kind of for protection, and it's cheaper because it's farther away. Um, but if you look at those kind of structures can pay out 5 to 1, 10 to 1. If it pins right at 120 in 3 months, that's how you get the max premium. That's how you get the max profit. But it's got to be very precise to get that max profit. Most of the time with flies or butterflies, I just call them flies. I look for at least a 200 to 400% return. If it's like 20 to 1, I try to make 300% or 200%. Try to get a like quarter of the max profit, because anything beyond that, you've got to be really precise, and it's hard to really pin it. And it's happened to me occasionally, but most of the time it doesn't. So kind of take the money and run.
Okay, I can with really high probability find stocks that, let's say, are 150, and my target might be, let's see, would it be 120? That'd be 20%. Yeah, easily. So 120. And are you suggesting, since that's a, I mean, that's a 30-point move in 3 months, are you suggesting that with this option structure, I'm effectively getting 200% on the where on the amount of money I'm risking, or on the amount of money I'm putting up for the options?
Yeah, and so it's a debit, so you pay a debit, so it'd be 200 to 300% of what your debit, what you paid. So do you want, I mean, I could screen share, I could show you what a butterfly looks like.
Yeah, would you please?
I'm curious.
Because I
Let
don't
me
have
give you
anything.
permission, Scott.
Okay. Do you have a stock in mind?
I don't know. No, there's nothing in particular.
All right, let me,
There's nothing I have on my on the sell stuff off the top of my head.
I'm just gonna pick, let me find one first, and we'll just play with it.
So I got to press stop share.
No,
Yes,
I
you
think
do.
I can just take over. Oh, wait.
Oh.
Okay, yeah.
Say, Ron, why did you use that signal that came in at the end of October?
What signal that came in? What are you referring to?
At the very beginning of your presentation, you said there was a
There
signal.
was.
Okay.
That was the 50 and 100.
Okay, why
50 and 100.
don't you use that
I mean,
signal
I've
as,
been talking about that for years.
I
That
understand.
there, about this one signal that hasn't had a losing trade in 95 years or 100 years.
I'm just saying, use that as for your example here with Scott. In other words,
Ah,
in October 31st, whatever, you got the signal. What if you implemented this strategy at that time? See what I'm saying?
okay, I understand. Yeah, but that would be a buy.
Okay, all right. Well, it's the same. Buy, sell. I mean, you can do butterflies either way, right, Scott?
Yeah,
I guess. Yeah.
yeah, I'm sorry, I have to reboot my Thinkorswim. I'm gonna bring up Thinkorswim here because they have a decent risk profile graphing system, which shows kind of the P&L possibilities. Just give me a minute here. Mhm.
Would there be something on FinViz or any of the other social sites? Yahoo?
Yeah, I have my Interactive Brokers up, but I'm not as familiar with their risk profiling tools. Oh, here we go. Okay, so logging in, it's loading up now. Share my screen in a second.
No, while we're waiting there, one thing I want to say about good old nobody, being a nobody means your ego's not into this. This is just a job thing that you're doing while it's fun and can make you a lot of money, and you can do some fun things with the money. The whole idea is that you don't pound your chest, and that's part of the personal profile I found is useful.
For sure. Yeah. Okay. Let's try to see. Can you guys see it okay? It look too small?
This is just fine.
Okay. So I've got Tesla here. So let's actually go to the trade tab where you can see the options. Okay, so here's Tesla chart. Okay, so if I have a chart here for Tesla, let's just zoom in a little bit. So let's say you want to you want to bet it's going to go 10% down, 20% down.
Sure.
So it'd
20%
be,
down in 3 months.
so it'd be like 200 basically.
Sure.
48 points, yeah. In 3 months.
Yeah.
Okay, so I'm going to target 200. 3 months is 90 days, so this is 797 days here. And the right is the put side. So my 200 puts are here. So let's just start at 220. So I'm going to say buy butterfly. Okay, so I'm buying 220. And then my target is 200. So that's me, the middle part. The meat, as we call it, the meat of the fly. Let me go the other way. 200. And then the protective side is, in this case, I would do 20 points because the first spread was 20 points. So I do 180 on the protective part. They have other versions like unbalanced butterflies, broken wing butterflies, where the spreads are different widths. So I can confirm and send. So what that does is it tells me it's going to cost me $2,100. My max profit is $17,000.
Wow.
That sounds pretty good, right? So let's look at, so I'm going to send this. Let's see, how do I want to, analyze trade. Here we go. So let's see, these are SPX trades. Yeah, that's an old analysis. This is that Tesla. It's SPX. Why is it not on there? Let me go back to here. Butterfly, Tesla. Okay. Analyze trade. It's not showing up here. Oh, I had simulated trades. Oh, sorry, I have to. There we go. Okay, I want to add that. Let's trade. Why is it not showing me the graph? Analyze. Okay, here we go. That doesn't look right. There we go. This is what a butterfly looks like. So this gray line is the zero. This is a profit line. The blue, let's see, the cyan line, the bluish line is your profit at expiration date. So if you pin it on expiration date, your max profit is right here at 200, and that's your $17,000 profit there. See all the way over here. The pink line, magenta line, is the value of that butterfly today. So you know, $2,100. And as Tesla goes up, we go to the right. If it goes down, we move to the left on the graph. And then you can also add different dates. You know, what does this look like on, let's say it's January. Instead of expiration, let's see, they have these things called slider steps here. Let's see, how do I do this? Let's do 4. That's too many. We got 4 different dates, and you can see each date is 22 days apart. See that right? 9th to 31st, January, yeah. 22 days apart. You can see how, as we get closer to expiration, the middle part gets higher and higher. But you don't have to get out at expiration. You can get out, you know, if I pay $2,100, which is about here on the left, so there's 2,000. You could get out at gray, which is February 13th, which is about a month early. That's still only about a 50% profit. Anyway, you can see, you can play with the P&L payouts at different expiration dates. So yeah, that's what a butterfly looks like.
Okay. It looks like I got a shitload of stuff to learn. Oh God, pain in the ass. Better,
Always more.
better connect with somebody else who wants to learn what's easy to understand for me, which is Andrew's, and you know they know something about this crap. Jesus.
But this middle section is called the tent. The tent.
Okay.
And and then you have the wings, or the body. This is the body or the meat. Then you have the wings. So at worst, you'll lose $2,100 if it doesn't, if it doesn't go down.
Well, here's a question. When you put on these trades, you just press the button at market, or how does that work?
Yeah, I mean, here I could just say, confirm send. I don't know if you see the pop-up screen or not.
Okay, I see that.
And then yeah, you just hit send and it'll place the order. Like I'll just go ahead and send it out.
So one of the things I have to make sure of somehow is that there's enough potential liquidity in whatever I want to get into.
Yeah, so it's a debit, so the most you're gonna have to pay is $2,100. It will never be worse.
Okay.
So you're not naked anything. That's one of the benefits. You're gonna lose
Okay.
$2,100 or make a max of $17,000 or something in between.
Okay. So I really so my absolute maximum risk is $2,100 in this particular strategy.
Yep.
Ooh, I can live with that.
Yeah, so max loss is your debit, is your $2,100.
Yeah.
In commission.
Well, if we take, okay, we take a look at ARE, for example. I went long that puppy. Oh, I got a long signal at the beginning of last month. I probably would have made a shitload more had I done some stuff with options.
Yeah. Yeah, if you're a good directional trader and with good even semi-precise targets, you can do a lot you can make a lot of money with butterflies. I am not a good directional precise target trader.
Well, maybe we ought to get together because I
Yeah.
have no fucking idea what you're talking about, and you have no idea what I'm talking about. So
Sure.
that can be arranged. Who knows? Where do you live, by the way?
I live in Orange County, near Mission Viejo and Irvine.
Oh, okay. That's not that far away.
Yeah.
I'm in Oceanside.
Oh, okay. Yeah. I like Oceanside.
You can also use Zoom.
Yeah. Yeah.
Yep. I don't mind taking a trip if it's worthwhile.
Well, I'll tell you what. I'll if you ever get together here, I'll even get you a copy of that thing you wanted that you really don't want to pay $1,500 for.
Oh.
Okay.
So there's a question here, guys. Do you limit the loss as a percentage of the account size?
I mean, I do, yes, for sure.
Oh, okay.
Yeah.
And then so Hannah's asking, Ron, if you are already used to futures trading, why just buy a futures option on your CD position?
Okay. Well, why just buy it?
That's what she's asking.
Yeah, that's
Hannah,
that's a question. I don't even want to wrap my head around that answer because I think the question is nonsensical.
Hannah, do you want to clarify your question for Ron?
She's asking just use options on the futures instead of options on stocks.
Yeah, that's a possibility. I just haven't delved into options because of the complexity of all the different shit in there. Where futures are really simple. Futures and stocks are really simple. It's going to go this way or that way. And if you have a good indicator that tells you which way it's going to go, or if I have an indicator that tells me the probability of it turning here and going up and to this target, which is like 2 or 3 months away, that's wonderful. So I can do futures, I can do stocks and all that kind of stuff. And by the way, sometimes I'll do the stocks, like the wheat trade, for example, which I could do the wheat in the wheat futures contract, but instead I have it in the thing there because in the accounts that I'm trading in, I don't necessarily have a futures account set up for that. So, for example, for my Roth IRA, I don't have a futures thing set up for that. The futures is set up for my personal account. So what you see is my personal account on the Roth, on the futures trade, and you may see a Roth IRA or a regular IRA or a regular account for my stock trades.
I was gonna say, as an option seller, yeah, VIX is really low right now, so that it's not a great, the S&P is not a great premium selling instrument right now. You can see it's at a multi-year low, 12.35.
Well,
The
Scott,
lowest
with
it's
the
ever
stuff,
been is 9. Never gone
well,
below
the
9.
stuff that I use, does that really make a difference?
Well, again, I'm just talking about being an option seller. You want to sell when implied volatility is high because it makes the price of options higher. So
Okay.
it's more attractive to sellers. But one thing you can do, one thing I've been doing is the oil market has its own VIX called the OVX. And it is not at a multi-year low. It's not super high either, but you can get some decent premiums in the oil market right now at 36.
There's another question here, if you guys have done structured notes versus options.
No idea what that is.
Yeah, I don't know what structured notes are.
Me neither.
Whomever is asking that question, iPhone, would you like to?
An ETN, like an exchange traded note. I've traded ETNs.
Okay, Scott, this OVX chart is
Yeah.
a weekly chart. Can you pop that over into daily? Oh, fuck. Okay. Okay. Well, Scott, here's the bad news on this, or the good news. I had a buy signal on this guy right near the low.
OVX.
Yeah,
Oh, down here.
yeah.
Wow, technical analysis on VIX implied volatility products is kind of laughed at actually in most circles. Like it's a calculation. It's not a supply and demand.
Well, I'm a nobody, so what can I tell you? You know,
This is Alan. I'm sorry I was on mute to explain or ask the question about the structure notes, if you guys been doing that. I just started this in the last couple of years, especially last year in particular, where there were a lot of volatility in the market. So similar to like the example that you use on Tesla, let's just assume it's a $250. You could buy, and I mean, at this point, I'm going through a broker. Okay. I do not do it myself, but let's just say at $250 per share on Tesla, you could structure a note whereby you would, let's just say, put 100,000, whatever the amount is in Tesla, and you could structure it either on quarterly basis or on yearly basis. Okay. And I normally do the yearly basis that from a taxes point of view, it will not be considered ordinary income versus long-term capital gain. So the way it will work, let's just say it's a $250. You structure it at, especially if you know where the pricing is going to be, you can structure it at 30 or 40% downside from where it is right now. So the 250 will be the strike price, okay? And let's just say you go 50% a year from now or 54 weeks, and you'll get about, at that time, I was earning about 22% for that structured note. The downside, so let's just say if it's a 40% downside protection, as long as it is above that 40%, you will get that coupon. If it is below the 40%, meaning let's just say you're at 41 or 42%, then you will lose the 40% of the principal. That's the risk.
okay. Here's knowing nothing about structured notes. What exactly are you buying and selling? Are you buying and selling options or futures or
It's
stocks?
Yeah, it's like correct. I mean, it's you're it's a piece of paper in a sense. You're not buying. It is like a future options, very similar to it.
Okay, so is this structured note thing, is this something Wall Street invented to for
Yeah, I mean, a lot of like JB Morgan Chase, Morgan Stanley, they've been offering this for probably at least 10+ years, if not more.
okay.
I personally, and especially in Q4 of last year, we benefited a lot from this because of the volatility. We were able to get much higher coupon. And Ron, since you already knows where, you have signals on the buy and sell, this could be a great option for you. But again, this is what I've been using as one of my asset allocations on the investment.
Okay, so here's my question. See, understand this, that what I do is very simple. Okay, and I'm coming across here intentionally as a really simple guy, not anybody who's trying to do this complex option shit. I mean, butterflies to me, which are really probably pretty simple to Scott, they're complex as hell to me. So in order for me to buy or sell a structured note, is there, is there a certain symbol I would go for? Is there a Tesla structured note, that chart that I could see? Because I'm Mr. Simple here, and if I see a chart, that's like he showed me this thing with the oh yeah, I don't care what it is. If I can buy it, or I can tell you whether or not I have a signal. I mean, I can look at this chart here and tell you I don't have jack shit.
Yeah, so we do receive like a charts from, but again, I'm not sure. I'm not a trader myself. I go through a brokers on that, so I work with them, and they provide me all the charts. I'm not sure if you were to do it on on your own, what kind of documentation you will receive on that.
Okay, yeah. I mean, I just look for real simple. Give me a chart, and
Yeah,
I tell you if I have something or don't. And looking at here, there's only one. Well, yeah, I have I have two levels of signal. Well, anyway, I do, but there's no signal there that I would want to jump on. But that's what I do. I just look for certain things that are interesting to jump on. That's yeah. The stuff I do is just super simple. I like to keep it that way because I don't want to wrap my head around this shit when it gets too complicated.
So guys, there's a question here from Sam to Scott. How do you feel about ODTE? That's 0 days until expiration, I think.
Yeah. I don't trade 0DTE, so I don't day trade. I have a job, so I can't do any. Well, I do want the trade I talked about a couple months ago, the earn trade. That is a 1 DTE trade, so that's about as close as I get. But I just open that at the end of the day, and it expires tomorrow. I just let it expire, so I don't have to do anything in the middle of the day for it.
Scott, I have a simplistic system that I don't use very much for trading the S&P. It's simply it's not as good as the longer term stuff I have, but it's reasonably well. Probably 70-80% of the trades are profitable, and it gets in and out on the same day. And I'm using futures contracts. Do 0DTs, are they like options for that particular day, or?
Yeah, so 0DTE means 0 days to expiration, meaning expires today. So it's become more popular because the SPX, as of, I don't know, over a year ago, has expirations every day now. And so people have been trading these they're day trading these. And a lot of them initially did really well at selling them because they expire that day. And so whatever premium you collect, you keep. You just have to make sure the market doesn't move too much against you, more than the premium you collected. But then there's also people who trade it directionally, like they'll go long or go long a call or go long a put, based on direction. And but if you're going to do that, you might as well just use futures, because if you're buying options, you're now paying that premium, that time premium. Whereas with futures or underlyings, you don't have pay any premium. So just depends on what kind of strategy you're using on 0DTE.
Yeah, no, for day trading, I'm simple as hell, and I just use futures. They're
Yeah.
just real easy.
I mean, it's Saturday, so it can't really be accurate. But if I did if I look at, so Monday, was the 11th, so that's the next 0DTE contract here. Let's see, let's go. And if I wanted to sit like right at the open, if I wanted to say, let's say it opens here, these are the prices. So if I wanted to, I could sell that at the money strike, and then I would sell this one. Let's see. Oh, I have to control click. There we go. So I could sell the put and the call right at the open. That doesn't look right. Delete this for a second. Okay, yeah. So now if I sell the at the money call and put at the open, I can get $2,000 for one contract for 20 points. Now, if market moves more up or down than 20 points, I will lose money. Obviously it's going to move something. But if it the same moves, it goes up, closes up 5 points. Well, my call, I'll make $15. So they make 20 points minus the $5 it moved. So I made not $15, 15 points, which is 100. You multiply by 100, so $1,500. So again, that's selling. And since they expire in 6.5 hours, you can just hold it and hope it doesn't go against you too much. A lot of people do these with iron condors. Some people will layer them. They'll sell at different times of the day, at different levels based on the market movement. I personally have not done a lot of it, or I just hang around people that do and kind of hear their horror stories or their challenges. It was really good about a year or so ago. It's not doing as well lately. So in terms of selling, but if you're buying and taking just directional, hey, I think it's going to go up, I'm going to buy a call. The nice thing is you could buy an out of the money call for really cheap, and if it goes up there, then you could really multiply your return. So I guess that's one advantage you don't get with futures, is this delta multiplier is basically it's a gamma trade. So the gamma is so high on expiration day that the payback can be very high if it moves a lot. It's much more asymmetric. It's a much more asymmetric return than your risk. So you have a lot more asymmetry opportunities than you have in futures.
Yeah, in futures, I just have a thing that says, okay, this thing is more likely to go up today than down. And so I just, click on buy, and the problem I have is that quite often, even though I get a signal early in the morning to enter, I won't get a signal until the market closes to exit. So, or 1 o'clock in the afternoon our time, which I guess would be after the expiration of these options.
Yeah.
And I don't want to, get my ass in a sling here. That's why I like futures. They're just so simple.
So for example, let's say the market opened at 4,600 and I think the market will go up 40 points. If I could buy a 20 point away out of the money call for 4.3 points, let's say it does move 40 points. So this now contract would be 20 points in the money, which would be priced 23 to 40 if it went, if it was instantaneous. So that's a 5x return on a 40-point move. So
yeah. See, when me, simple me is just looking, hey, look, I'm looking for this guy here to go up and to my upper indicator, I guess. And maybe it'll, so and it might not make that until sometime in the middle of the night, so.
Yeah. It depends on strategy, like Kevin said in the chat.
Yeah. Yeah, it's a little tougher. Yeah. So anyway, guys, on my stuff, I'm having my son's starting on doing this thing here, and there's an interesting financial incentive for him to do it. That's real simple, free rent, and which can be quite a bit. And maybe in a few months we'll have this thing up and running, and because he's effectively done it before. We just have to modify a few things to make my stuff work. And then later on, we'll take a look at then eventually do some options or something. But if you look at the market enough, you'll find stuff. You really need to take your time and look at it. Keep your eyes open and look at the patterns, look at what's going on, look at your different indicators. If you like certain indicators, or you'll find it. And when you do find it, don't spread it around. You just dilute it. That's all I got to say. If you got any questions, I'll be glad to entertain them. We can go on to Mr. VT Scalper. Ooh.
Okay, I think there was one or two things in the chat. Let's see.
I think we got them, John.
What's that?
Maybe not, but I thought we did.
I thought Kevin had one here that said it would seem that structured nodes would require a different type of analysis in terms of risk reward and trade-offs. So that's probably true, I would imagine. I guess that's a subject that I never heard of structured nodes before, so maybe that's if somebody would want to do a presentation on that, that would be great. So yeah, I don't know how structured nodes would fit into somebody's portfolio, or as a trading vehicle, or what. So
there's other fun things out there, John, like preferred stocks. I mean, we don't ever use that. When we're looking at stocks here, we're always looking at this common stuff.
Right. Yeah. I don't even remember hearing that term, preferred stocks, for a couple of decades probably.
Yeah.
Preferred stocks. And what was the advantage of preferred stocks?
They pay interest.
Oh, okay.
Or dividend or something like that.
Okay. Well, is that well, a lot of stocks pay dividends that don't have preferred stock. So I don't know. That's just another topic that maybe could be used in the future, as far as if they're tradable. Would you want to trade them, or are they more long-term holds?
There's a fairly expensive service that I don't subscribe to that covers spin-offs. So, and the theory is that these spin-offs are supposed to be very profitable if properly analyzed. So, you have some big company like IBM, and they decide that one little section of their company is going to be spun off into and it'll have a whole new symbol and stuff like that. And some people are into buying those, and whoever is selling the service on spin-offs sells it for a hefty price. So the wonderful world of stocks and investments is just huge in terms of what people come up with.
Right. Well, wasn't there a lawsuit recently against Amazon that they were proposing to spin off parts of their operations? So
I don't know. the irony of it is these big companies are getting hit with lawsuits regarding antitrust, and then when they do want to think about doing a spinoff, somebody else sues them. I mean, this God, why don't they just sue over a ham sandwich, guys? This is America. God, what a lawsuit heaven.
Yeah, well, I guess that's basically what they're suing over. So, okay, so okay, the bad news here is Bill wasn't feeling too well, so I don't know if he's in a position that he wants to make a presentation today or not. So, Bill, are you still with us? Did you?
I'm still with you.
Okay.
I just keep it muted, so when I'm hacking,
Okay, all
so
right.
nobody hears it. So now I got to remember how to do it to show my screen here.
Oh, okay.
Bill, there's something in the chat for you also. It says, I would like BST Scalper to explain what trading classification would apply to what he does. Would that be market structure, order flow? I assume it's not short-term trend following.
Okay. I'm a scalper and short-term trend following. And what I will show today, some of it will be scalping, some will be short-term trend, scalp trend combination. And, so can somebody help me get my screen up?
Yeah, so you have permissions. So what you want to do is make sure that what you want to share with us is on your desktop.
Okay.
And then you want to go to the bottom of the Zoom meeting and you'll see a
Share
green
screen.
button that says share screen. Push
Okay.
that green button and then click on what it is you want to share with us. And then you'll see in the bottom right-hand corner another button that says share.
Okay.
So it's 3 steps.
3 steps. There we go.
Okay, well,
Okay.
Bill's doing that. There was a question for Ron from Hana that Ron, do you see a buy signal on Euro since October as well?
The answer is I don't have any analysis that would go one way or the other on that.
Okay,
And that particular screen won't tell me anything. Yeah.
okay. So you're not trading the Euro at this time?
Well, no, that isn't what I'm saying. What I'm saying is I had a signal in the Canadian dollar and I went long that, and had I had a relevant signal in the Euro, I might have taken it. But, you know, depending on whether or not there's a reasonable 2x ETF that would cover it, I could also trade the actual Euro. I'd have to sit there and do the actual analysis to figure out if I had a buy or sell signal in the Euro. And I don't have a screen up for that, so no can do.
Okay, thanks, Ron. Hopefully that answers.
No, it doesn't. I don't do forecast on demand anyway.
Okay, you got,
And
it says the signal.
And Joan, yes, the answer to your question is yes. All right, Bill, it's all yours.
can you
And
see
we
my
see your screen. Yes, we do.
All right. Okay. All right. Anyway, I'll try not to hack in the room here. This is my older method trading, and can you see the full screen now?
Perfect.
Okay. And I don't use a lot of indicators. The only indicator I really have is a support and resistance line, if you want to call it that, and these little green and red dots. This red candle is the same as this one, et cetera, et cetera. And these little red and green dots down below, from here to here is 1 tick. But on that green dot, there's a volume, up volume of 20 and a down volume of 17. Okay. And so on each one, it's different. Here it was 76 up and 309 down on that one little 1 tick range bar. It's a 1 tick range bar here. So what I do is I divide these candles up, and you can see over here from this candle to this candle, there's a lot of activity going on. Okay. I don't want to get into much to this with this today, but you don't need any special indicators. You don't need the bottom chart actually. What I do on this chart, this is still my favorite. Yeah, I have my algos, you know, my, basically I'll show you. I have these algos here that gives a signal and everything. I don't use indicators or anything like that. It's all about price action. But anyway, my old method, I look for range conditions where price goes sideways. I look for support and resistance, like if a bar like this bar right here, if it comes within 3 ticks, this is a 7-tick range bar, by the way. If it comes within 3 ticks of hitting this line, so right here is 3 ticks away from the green line at the bottom, then I go long. It's that simple. And I'm a scalper. Anyway, I love a lot of, I had a room years and years ago on old Hotcom, if anybody remembers that. And a lot of the guys in there called me 2-tick Bill because I go for 2 ticks, but with multiple contracts. And my trades would last a very short period of time, just seconds most of the time. Anyway, so this is my older method. And, but based on this, and you can see right here, this little blue thing here, this is for figuring out head and shoulders on a 1-tick thing here. So this would be my left shoulder. This would be my head. This would be my right shoulder. And I won't get into this a lot here today, but then I would go long here and maybe get a run. Okay. And they're all over the place on this thing. There's another one right here. This didn't last as long, but it eventually went down there. So anyway, I still go back to this. I trade my algos now, but I still go back to this. Anybody can do it. They don't need any special indicators or anything. They just support and resistance lines here. They don't even need the bottom chart. But I like a clean chart. I don't like putting a lot of indicators on my chart. Okay. So this is all about that. Now, if anybody's got questions, just holler. This is my setup. I got the ES on top, the micro ES, the NASDAQ, and the micro NASDAQ here. And all I do is look for, when I get a green arrow, I buy. And if I can stay in the trade if I have multiple contracts. Now this shows 10 contracts. At the beginning, it started out with 1. You can see it started out with 1 here. And then as you build your profit, you know, it could go down too. Now it decided to go with 2 contracts right here. Okay. And then eventually goes 3, 4, but I have a limit in there, a maximum of 10. I can do on this algo, I can do up to 100 contracts. I would never even try that. So, but anyway, scalping on this particular one here, got in at 94, the signal's at 94, 5 contracts off at 96.25, you know, and this is the ES. So anyway, I'm going to go through these things here. I just want to show you this is all about the algo, no indicators, all based on price action. And by the way, I'm going to go in here.
Can I ask a question? What's the difference between an algo and an indicator? I mean,
Well,
I didn't really understand 90% of what you said. So can you focus on just one symbol and explain the terminology?
Well, the thing is, okay. On an indicator, you have some kind of indicator on here, moving average, MACD, or whatever it might be. And if it crosses over, you may get in short or long or whatever. And
but you are using indicator. You're saying up volume and down volume on a 1-tick bar.
No, that's how many contracts were traded on that bar.
Right.
That's got nothing to do with an indicator. Okay. But here, what I was going to show you is right here. Okay. I don't do back testing or anything like that. I can do a back test, but I don't. Right here is important for me. It's all based, remember the little green and red dots, 1 tick increments. What is happening between the bars? In the same way with my algo, what is happening between the bars? But you don't need an algo. That first charts I showed you, anybody can do it on their screen. You know, you just need support and resistance lines. And anyway, so you notice here it says maximum number of bars study will reference 1. I don't go back 100. I don't do anything like that. It's not some like a moving average or something. We have to go back a long ways. Okay. And all I'm trying to say today is it's not even really about these algos. It's about just keeping things simple as possible. Okay. And you can't get much simpler than this, for me anyway. So for, like if I'm scalping, I see the signal, I know what the price is, I have my target, and I'm out of the trade. I'm done for that trade. And now on the NASDAQ, this happens to be up here, happens to be a 50 tick range bar. The other thing I look at, you notice this is the ES, it's EP on the software that I use. So this is the ES, the NASDAQ, Russell, Dow, and the one on the bottom is, I make my own type of bar. It's just a little different. So I have this one on the bottom, the same as the top, but so I'm looking at 4 different markets that I like, okay? And in order to make a decision whether to get in a trade or not. And I don't know if that makes sense. I keep a tight stop, you know, like on this top one here, like this one right here, this one here, this one here. What I want to show you is this. Okay. I can set my time, what time I want to trade during the day, my starting capital, my margin, all that. And we'll forget about this right now, but so it'll do up to 10 contracts. And the first one, you're taking 5 off, 6, 7, 8. And the reason there's not, you know, it doesn't add up to 10 here. Well, I'll show you on another screen, but so I'm taking 10 ticks off of the first 5 contracts at 10 ticks. Okay. My break even, this is real key. My break even is 9 ticks, 1 tick lower than that. So my target is 10, but my break even is 9. Okay. And the reason I do that is so I don't have any major losses like this one right here. 10 contracts. It got out with 5 contracts at 8 points. This on the NASDAQ, then lost on the other 5. And the way I do it, I'm a manual trader. I have these algos. I like my algos, but I don't trust multi-charts. I don't trust, there's so many things that can happen if you just let it run by itself and you're not watching it. There's so many bad things that could happen, you know, and I've had it happen before. And so I'm always watching it. I'll take the signal, but I'm always watching it. Anyway, if you look at this one up here, it got in at 94.25 short. The first target was 92.25, so it was 8 ticks. So it got rid of 5 contracts, and I hope people can read that here. Then it got rid of another one at 1.25 down. Then it got rid of another one. In the bottom, it says cover 2. But as the price backed up towards the entry, it covered 2 at the entry price. So basically you lost commission. Okay. I don't mind losing commission. I don't want these big losses like this. And if I can help it. So I'm just showing you some of the stuff that I do. This one here, these are all 3 on the NASDAQ. And this one here is set up. It's a 250 tick range bar. And the ES is set on 5, the Russell 5 points. Yeah, I like point charts because the bars are all the same size except for the end of the day here. They're all the same size always. And anyway, so that's what this one is set up on. Okay. And all I do is I take the signal. I get a signal at it shows here it's 16,000.25. And 16,000, 12.25 is the exit. Okay, and it was set to only do one contract. I made it on purpose just to do one contract. And it's in, and this is all black box. There's no values to change. Okay, I basically what I'm trying to do today is really get people to thinking about, you don't need a lot of other stuff to take the trades and to be profitable, you know. And I don't know if I'm making sense. Now, the second one down here is also a 250 tick range bar. This has got 2 instead of 5. Okay, I can put any numbers in there and I'll show you in just a little bit. Okay, this one here, it's set to do up to 100 contracts. And at this point in time, it started out with 1. Okay, started out with 1. And eventually it made enough money to do 2, and then 3, and it can go the other way too. If it has a big loss, it can go, like it might be at 3. If it has a big loss, it could go back down to 2 or 1. Okay, but eventually I don't trade these many, you know, there's no way that I'm going to trade 100 contracts or 72 or 69 or whatever, but it's just for the signals. And anyway, this particular one here, if I put this up, this thing down, this thing, I don't know how to get rid of that. Is there a way to get that up out of the way? I don't know. Anyway, let me just do this down here. Again, I don't trade that many contracts. It's just for the signals. There's still 27 contracts left to be traded on that trade. And this will take up to 100 contracts. Okay, so there's just 27 left that's still in the trade. And I'll spread this apart some. There's a lot of arrows that are out there so close together, but anyway.
So Bill, I'm a little confused when you said there's 27 contracts left.
It yeah.
I mean, when you showed the that short at, I forget what it was 16 something or other, and it was 10 contracts and you got out, and the last one was the break even.
Oh, you mean over here? Yeah, this is the same algos, only I have a limit of 10 contracts on it.
Okay, well, you were showing I don't, you know, I don't know exactly what the trade was, but you showed you got 10, you were short 10 contracts, and then you got out at 5 with a profit, and then you got out at like the next 3 or 4 also with profitable. Yeah, there you go.
Yeah, there you go. And then price backed up. Once it reaches to a certain point,
got back out to where
it backed up, and okay, instead of going negative, you know, getting a big line like this,
right,
it went break even on the last 2 contracts.
Okay, so you made money on 8 of the 10 contracts, right?
Right.
Okay,
now here it did the same thing, but
okay,
it got rid of 5 with 2 points profit, 8 ticks, but then it backed up on the other 5 and broke even.
Okay, all right, now are these automated trades or
you know, I would love to go full automation and not even have to look at it.
Okay,
but I've had experience in the past with NinjaTrader, with multi-chart. Trade Station was really bad. But you know, as soon as you know, you could get up, walk over, go to the bathroom or go to kitchen or whatever, and come back, and everything was working fine until you did that. Then you come back and something happened, you know.
right,
And that's just my feeling. So I trade 2 hours maximum in the morning. I don't go any farther than that. And it's based on years ago, things that happened, and I just feel comfortable 2 hours. That's when the most of the activity is anyway.
right.
And anyway, so I trade maximum 2 hours, and I'm done for the day. You know, I talk to, and just to be honest with everybody, I have several clients. I have some CTAs, CPOs like that, and some very high net worth people that use some of my software, not this newer stuff, but anyway, I'm not here to do that. I'm just here to show. The reason I'm showing this is based on pure price action. What is happening on the bars? Okay. And that'll goes back when I started doing this right here on the bottom. And it's like looking at what's happening between each bar. Then I came up with this idea. Well, maybe I can use that, you know, in an algo. And, you know, it just worked so good. And there are some things that I'm kind of going back and forth here so much here right now. But if you notice, you know, let me pull this down. Here's some green candles here. It went long here, didn't do one here, went long here, then all of a sudden went short, then all of a sudden went long. Normally I would not have done that. I'm looking for, here's like 3 green ones and going together, you know. I might not have entered here. I might have entered here. I wouldn't have taken this first green bar. But then I developed an algo, and I'd like to say I'm really smart, but it was an accident in my code. And when I would see something like this happen, it's like, I put my code aside for quite a while, months even, I think. And because, well, something's wrong with this, because why did it go there, go the opposite way? For what reason, you know? Then I finally went back to the code and I started looking at it, and it's like, wow, I like this, you know? And I was kind of stupid to put it away, you know? Anyway, so
Hey, Bill, there's a
I'm all about,
question.
go ahead.
There's a question here. How do you come to trust your algo? And he says, after all, an algo is nothing more than a series of occurring conditions with an automated action. And that's true. For me, it's simulation. But how do you come to trust your algos?
Well, it's at first I didn't when I started coding, and I've been coding for ages now. Yeah, I still didn't trust my algos. Before I started coding, you know, I was doing like everybody else, and I was going into a lot of rooms online, you know, like HotCom was big back then, and trying to learn from other people. And anyway, basically what I learned is how to lose money faster. And it might not sound nice, but anyway, I started thinking for myself. I started coding. I wasn't very good at it first, and I started thinking my own, you know, how can I improve on this, you know? And I was using a lot of indicators. I think I gave an ebook to you, John, didn't I?
Yes.
Yeah, and I don't know if I gave it to you before, but if you look in there towards the bottom, some of the pictures in there, that's the way my charts used to look. And the more I put on, more indicators I put on my charts, the worse my trading got. And then finally I just stopped it. Anyway, I got into coding. I started thinking, you know, how can I improve on this? And so I've been doing this for a long time. And then I came up with this many years ago. And to be honest, I trust my signals, but I don't trust letting the computer, letting it go on full automation without me sitting here. So I'm mainly a scalper, and I love scalping. I want to finish my trading within 2 hours in the morning, and I'm done. And win or lose, I'm done. And that's really important to me. And now I got grandkids, everything. I'm 75 years old, and we've got a lot of grandkids. I'd rather spend time with them. But the point is I don't like taking a lot of risk. For me, indicators, looking at lines, moving averages, things like that, I did pretty good after a while. First couple of years or so, it was almost went out of business a few times. But when I started doing like this without having to look at all the other stuff, my trading improved tremendously. Now, maybe I'm just rattling on here. I'm sorry about that. But anyway, when I did this down here, this little green and red dots, when I started breaking these candles up, and look how many from this candle to this candle. Look at all the activity there compared to this one or this one. And this got me to thinking, okay, is there a way to improve on what I'm, you know,
Okay,
even-
can
go
I-
ahead, I'm sorry. What was that?
can I ask a question?
Sure.
Okay, so the red dots and green dots, their volume on those contracts,
This is actually what is happening. So this is actually the last two on this set here. This is what actually happened on this green candle. This is what actually happened on this red candle. So I can see when it goes up and when it goes down, and the color change is something that I did. I mean, I could have a green dots, but it's down volume, or I could have red dots with up volume. But the point is, okay, you look at this one, I don't know if you can read it, it says up volume 76, down volume 309 on that one. It's a 1 tick range bar. Okay. That's how much volume on that one little one. This one only had 37. This one had a huge amount, 10 times more.
right?
Yeah.
So with all that volume on the downside, that tells you, I mean, you got a green bar. Well, it's just confusing me. Okay, you got green bars at just before 12:49 and a big red bar up on top.
Yeah.
So
Well,
so is that
here's what I'm looking at. I'm looking at this, but I'm also looking at resistance and support up here in the code. Okay. I'm looking at several different things in the code. And it's just like this one right here. Normally, we got a support level right here. 1, 2, 3. Here's 3. This close of this is 3 ticks away. Close this 1, 2, 3. So when this comes, this is something on a 7-tick range bar. This is something I noticed years ago, and it happened like this all the time, so often that I thought, can I use this? So when it comes within 3 ticks, this would be a support level. I have to have 2 green candles closing in order to create a pivot. It's just like right here, 2 red candles closing to create a pivot. Okay. And so that's resistance now. This is support. Now this one's gone away because I got a new one over here. But when that came within 3 ticks of hitting that, I go long. And let's say I got 5 contracts. I can either scalp it with 5, or maybe I take 4 off at 2 ticks, maybe get a little runner. But as soon as it starts running a few ticks, my stop would come in minimum break even. And that's the same thing I was showing you right here, on that here. So I want to get at least to break even as fast as I can. So once I start getting into profit here, my stop comes down. My stop on this, well, you can't see it. Yeah, you can see it on this one. My big stop is disaster stop is what I call it. It's 50 ticks, the same size as the bar. My break even stop is 9 ticks. Okay, 1 tick less than the first target. Okay. So I want to get my stop to break even as quick as possible. I don't mind, you can say losing. I don't mind losing commission on the other contracts, but I don't want any big losses like this. Now, if I had been watching this one here, I would not have that loss, because this is a 250 tick range bar. It had gone up it had gone down 8 points. That's 40 tick or 32 ticks. When it goes down, whatever I have it set, I don't have it set on this one, or do I? Yeah, I have it set at 49 ticks. Okay, but it only went up 32. Had it gone up to 49 ticks and came down, it would have broke even. But I'm watching this, I'm just looking at it with my eyeballs, and once it goes down, and then I'll just bring my stop in, 5, 10 ticks. When it comes down, bring it in. So the worst case I might have is a break even or a small win. Then I wouldn't have this big loss. This is the way I trade. Now here's a loss at the end of the day, but I don't know if I'm making any sense, guys. But anyway, what I
There are a
wanted,
bunch of questions, Bill. What
Sure.
time frames are you using? And you're using Thinkorswim, right?
no, I use multi-charts.
Okay, and what time frames?
Well, no time frame. I use range bars mostly, and I'll show you something in just a few minutes here. But I use range bars. This here is a 250 tick range bars. They call it points. Okay, and this is the NASDAQ here. The NASDAQ, I mean, it's a wild one. It's really wild, and so I use a lot bigger bar. I mean, I could use a 100 tick range bar, whatever. I could, and let me show you. I didn't want to go there yet, but I will. I will go there. Let's see this. This one, is this the one? Right. Whoops. I don't want to do that. Okay, it's not the one. This one, I have them all on the NASDAQ. I shouldn't get into this. Where is this? I know I have it here somewhere. Oh, okay. It's the bottom one right here. But I want to show you this. Can you see this? This is the NASDAQ, the ES, the Russell, the YM. I'm looking for market move type things. Okay. This is set up, this particular one. There's nothing to change here. It's black box basically. So on the NASDAQ, I got a 200 point. And on the second part of the NASDAQ, my scalping part, I got 22 seconds. I just threw this together yesterday just to show. Here on the ES, I got tick bars, changes, whatever that is. I used to know, but here it's got minutes on the Russell and the contract bars for the second one. And the YM, I got something totally different on each one. Okay. And no back testing, no nothing, because there's nothing to back test. Okay. And there's not a lot of trades. Okay. But here's the results of it right there. So, you know, it's about the algo, what it does. And and the other thing I like, guys, is the average win-loss ratio. This is your average win is, okay. In this particular, I could have a very small number of wins and a large number of losing trades and still make money with a low percent profitable if I can get my average winning trade to be a lot bigger than my average losing trade. And that's what this ratio is about. Okay. But you can see these are over, everything here is over 10 days. Okay. And this is 24 hours a day. And I can also, I'll show you in a second. Here you can see little steps here, but anyway, I don't know if I can get rid of that now. Anyway, this is what happens here. No back testing, nothing. You just put it on there. I don't mean to try bragging or anything like that. I'm just trying to show you. This one here is limited to 4 contracts. It's a 30-minute. And in this, I have this code on here. It goes up to 1 to 20 contracts, but I have it limited and a little bit different. And this is the same as the one on the bottom. Here I have my break even 17 here ticks, and here I don't have it in there. I just put a big number in there, so there's no break even target. What allows it to go, you see some of them are scalped, and then you see some runners. What allows it to do that is this ratio 4. I put a huge number in there, so you got 4 contracts. You take off 1 at 3 ticks, 1 at 6 ticks, 1 at 9 ticks, and the last one, it'll try to get a runner by putting a big number in there. That's all it is. Okay, and I didn't put a break even in there, and I just left it like it is. And anyway. Now here, this bottom chart is what I really like. And it's got a very low winning percentage. And let me show you here. It's only 41% winning, 94 wins, 131 losses. But again, the win-loss ratio is what's important if you can get there. 387 average win, 2810 average loss. And I have these things down and even in single digits and still make money. But you see all the break evens? It's all about controlling your losses, you know. Once in a while you get a bigger loss, but most of the time it's got a very tight break even in it. But when it does win, it does pretty good. And if you can see here, this is the results. 10 days. It's got a small, relatively small drawdown. Okay. If I'm talking too much, guys, just, you know, tell me to shut up.
I was just gonna ask a question. I forgot what it was now.
Talking about that. So anyway, the point is, all I want to see is the signal. Okay. And again, it's all about price action, and all my algos. And you can see here, maximum number of bars study will reference 1 bar. I used to use 100, 200, 500 bars, you know, and you have to use that with other indicators, you know. And here's my cost here. And I don't know if I'm making sense or not.
That's pretty good. I think I'm one of the newer guys, but you have an awesome win percentage rate, and the multiple on the return is phenomenal.
Yeah. And see, I don't really know what to do with it, to be honest with you. I've been trading this way for years, and I've had some opportunities. I've been in 2 trader expos. The second expo was in San Diego, actually. I had a booth, and I think it was 2007 or 6 or something like that. And Ninja Trader was in my booth part-time, and they oh geez, I can't even think of up just the little place just north of Del Mar along the coast. Son-in-law.
Solana Beach,
Yeah,
Solana
right.
Beach, Encinitas.
Yeah, I used to go to Encinitas, but I better not tell that story.
There's a question here from Cindy. What's your average profit per trade and the average number of trades you're doing a day?
Well, it's all about, usually I do about 5 contracts, once in a while up to 10, but it has to be done in 2 hours. And as far as average profit per trade, I'm trading, what I'm showing you here is mainly the NASDAQ and the ES, but normally I have like the ES, the NASDAQ, the Russell, and the Dow. Okay. And so it all depends on what I'm trading, but I have a net daily goal, and I'm not going to tell you what it is right now because you wouldn't believe it anyway. But and most of the time I don't make it because I'm busy. I do have clients. I just want to be upfront, but they make me money, so that's why I talk to them. So, but these clients are from way back when. And you guys ever hear of MF Global? Remember MF Global, the brokerage?
Out of business or something?
Yeah, they went out of business, but before they went out of business, I had a room on HotCom. Somehow this guy from MF Global came in, one of the brokers there. He was in HotCom, and he found me, and next thing you know, they invited me to Chicago, him and another broker, and he worked at MF Global. And I said, well, I got no reason to come to Chicago. And he says, well, we'll pay your way. So, okay. And, you know, they had the pits open back then, and they even took me down to the pits. And what I didn't know in the pits, that because you don't see it on TV, is up on the backside of the pits, they had some rows of computers with people sitting there. But I actually got to go into the pits. But anyway, this I went there to talk to them. They put me up in a hotel right near the CME CBOT thing area. And I go over there and they, I thought I was just going to talk to these two brokers. And then next thing I know, I ended up going down to this conference room, a whole bunch of people around there. And I just scared the heck out of me because now I'm going to have to talk. And anyway, but that's how I got some of these CTAs, and CPOs like that. But that's a long time ago. And so anyway.
Okay.
Oh, sorry to interrupt. And then what is it that you do for clients? You actually have accounts trading, or is it a different business?
No. I don't trade for anybody. And no, not the software I have here, but some older software, and it's only for them. And I'm not here looking for clients. I don't need clients. And I'm getting kind of old. And like I said, I'm 75 years old now. And so anyway, I'm just here to talk, show basically what I'm trying to say is this is still my favorite setup. I can trade without this bottom. I could trade all day long with this thing here if I wanted to. Where I used to get killed was when price went sideways. And it might be something in that ebook. I can't remember, it's so old now. But when price goes sideways, I used to get killed. I mean, I'd lose money. And then I figured out a way to do it. And actually, it's one of my favorite ways to trade. It's just like this here. I would normally lose a lot of money here. And my background is in engineering, aeronautical engineering. And I used to work in California, by the way, for a while. And anyway, when I was losing, when I first started trading, I thought, oh, this ought to be easy, and it wasn't, because I did a lot of stupid things. And the more I thought about it is, why am I doing this? Why am I doing that? I'm following other people that weren't doing any better than I was, And so I started coding, and that's how I got where I'm at. But again, I like simplicity. And I have a motto: discipline plus simplicity equals success. And that's what I'm all about. The simpler I can make it for me and my current clients, the better. And this is how I got to the point, based on watching these green and red dots every day. That's how I got to coding what I have here. And anyway, but even if you don't have this stuff, the thing is, the more indicators. I probably had 6, 7, 8 indicators or more on my chart when I first started, and I was really having a hard time. And then I started taking them off, and the more I took off, the better my trading got. And that's what I'm all about. Is I don't need all that. I'm looking at price. That's all I care about. And just
so
like
is that
this,
your signal is primarily price?
yeah, price
So
action.
someone's asking this question in the chat. There's a lot of chitter chat going on here. Okay. Thanks.
Yeah, it's all about price, and I have I have my method. If it's just like this one here. Did this one come within 3 ticks of this? This would be my support. I need 2 green candles or 2 red candles to have a support or resistance line. So did that come within 3 ticks? This is 4608. This is 850, came within 2 ticks. At 3 ticks is 1 tick higher. When I see 3 ticks, let me go over here. I'm bringing it over there, and you see the vertical line on the bottom. When it comes within 3 ticks of hitting that support, this is how simple it can be. Okay, this is 3 ticks away, and you can see my. Let me get this over a little farther. Remember the green and red dots before the candle, between this red one and this green one. So all these green and red dots are for this. You don't even need the green and red dots to do this. When this comes within 3 ticks of hitting my support, then I go long. And if you look at the bottom, just for show, look to the left at the bottom where the horizontal line is, and you see the first red dot on that line. Okay. That's right here. That red dot right there. Alls I know is when I come with, I know what the price is here because I would have a line there. When it comes within 3 ticks of hitting that, 1, 2, 3, I go long. Okay. So right here on that dot, I go long. I take some, if I got that price, I take some heat here, 1 tick of heat, then it goes up 2 ticks. Now, like I said, a lot of guys used to call me 2-tick Bill. Okay. I'm not necessarily out of that trade. I might be stuck in there. There might be a lot of contracts ahead of me. It goes down again, eventually goes down. Now, and if you look at this, this is 11:56, 44 seconds. Okay. You know, and then even over here, it's 11:57, 22 seconds, not a long period of time. And so it went in my favor 2 ticks, another 2 ticks. It went against me a couple more times, 1 tick. At 3 ticks, I can be out of the trade because I'm going for 2 ticks, but I want to be honest. I have to go past my 2 ticks in order to make my 2 ticks. Okay, I don't want to tell people I automatically going to get out here. Now I would have my 2 ticks. If I have 1 contract, 4 or 5 contracts, whatever it is, just think, I don't know what other people pay for commission, but let's say I got 5 contracts, you know, $12.50 per tick on the ES. Okay. So what is that? $62.50. And let's say you're paying $5 round trip. That's 25 bucks. I don't pay that much, but let's say you're paying $5 round trip, 62.50 minus 20, minus 25. You still made money, not in hours, in minutes or seconds. This is the beauty of this setup. And it's so simple. You don't need the bottom thing. All you have to do is be able to look up here and say, well, did that one come within 3 ticks of this or whichever one, you know, and go in the other direction too. That's the one right here. And you look at this when it comes down here. Here's another. If I'm talking too much, just tell me. I got to see if I can find a horizontal line here. Okay. I went off the algo things, but 1, 2, 3. So right here is, okay, and I'm going to click right here. It brings that red candle over. So all these, you know, there wasn't a lot of activity on that red candle, but it came within 3 ticks. And this is 3 ticks away from that line. That's this red dot right there. I go long. 1, 2, 3 against me. 3 ticks against me. Then look what happened. And what I love about sideways movement, which I call a range condition, especially near support or resistance, is the fact that I may be getting multiple trades, you know, on these other bars here coming down within 3 ticks, if that makes sense. So, and so I've had times where these range conditions could last half an hour or more, and I can make my net daily goal just the sideways movement. And if anybody ever wants to talk about it or something, they can come and get a hold of me. You know, I won't sell you anything. I won't do anything like that. But this is where I love this setup. Even though I have all my algos, this is what turns me on. And at my age, it's hard to turn me on, you know.
Bill, got a couple of questions.
Okay.
There's a bunch in the chat there. One of the questions I have is that looking at your strategy performance summary there, is that your actual trade or is that the automated?
No, this is if I had made money and lost money on all the trades for 10 days. Okay. This is 24 hours a day. Okay.
Oh, okay. So that's the automated.
Yeah, this is what could have happened.
Could have. Okay. All right.
Okay.
So,
and
the question I have is, what would you improve your performance by using a computer entry rather than?
Well, I would love to do that, but I think I said earlier I've done that in the past. Oh wow, that went back up. Oh crap, I shouldn't have done that. Anyway, I've done that in the past, and every time I've done that, and I've done it on NinjaTrader, TradeStation, I've done it on multi-charts, I just don't trust it. I have to still sit here anyway,
Well,
because I don't trust the full automation. If I could learn to trust it, I would do it,
there.
you know, and I don't know.
Okay, well, I'm just, if you're sitting there, maybe you would get a little bit faster execution and make a few extra.
Well, this is the other thing I do. Okay, let me show you this. Okay, just like on this trade here, when I see that arrow, in order to get rid of slippage, okay, the way I do it, so that arrow is at 94.25, okay, and it went up to a high of 95.50. But as soon as I see the arrow, I don't get in immediately. I want to see it back up at least 1 or 2 ticks. And as soon as it backs up, then I hit a market order to get in. And sometimes I get a better price, but most of the time I can get that price. Rarely will I get a worse price. This is how I save myself, because I used to trade a lot different. So just that simple thing here, I would have waited, because of the bar, I would have waited. I see the arrow, it pops down, I hit a market order. And let me see if I can get this to go up again. I don't know how to get it to go up.
Okay, you got a bunch of questions here. Why don't we take a break for a second and go through some of these questions? And
Sure.
okay. And I don't know where we started or ended. Okay, there was one about. Okay, from Richie C. How stressful is scalping in comparison to trading on the 1 hour and 4 hour? I personally trade on the 1 4 hour and daily.
I've never done it.
Okay,
It's way too slow for me. For me, scalping, and I'm just kidding when I say this, and I might have said it before. I'm from Montana. Both my brother-in-laws are American Indian, and that's how I learned scalping. People didn't like driving through the reservation too much because they heard about us. Anyway, but no, I've done both. I've trend traded and I've scalped. And with what I do now, I can scalp and or trend trade on the same setup, and that's why I like doing it the way I do it now.
What time frames do you use? And is this on Thinkorswim? So I think you answered that.
Do you have range bars there? I'm sure you do.
What's that?
You have range bars on Thinkorswim? Somebody?
I imagine I do. I don't know. I imagine.
Yeah.
Now, you don't use time frame. You use range bars.
I use range bars only. Okay.
And your 8-to-1 average return on risk return is insane.
No, that's the algo. Okay.
Yeah.
That's one of the, I mean, they don't all get like that. I mean, I can have a lot higher than that, but I shoot for that in my code. That's what I'm trying to do. I'm trying to get an excellent win-loss ratio.
Okay.
Because I do make mistakes now and then, when I trade.
And your average profit per trade and the average number of trades per day?
The average number of trades, it depends if I'm busy or not. Because like I said, I don't trade as much now as I used to because I got clients. Okay. But if I was trading normally, I might have 15, 20 trades in the morning in that 2-hour period.
Okay.
And some would be a scalp trend combination. It depends on how far I think it's going to go. I look at the bars. I don't know that this one's going to run up here after these two sideways. I don't know it's going to go up there, but I will look back here. Where's the next resistance? Okay. And see how far it could potentially go. And I would already know the volume on the bars and see if it's, if there's a chance that it's going to go up.
Another question was, can you walk us through how a signal is generated or a code walkthrough?
A code walkthrough?
So we don't want to get into showing code here.
Yeah, I don't think I wanted to show code, but
Is
I
that-
wanted to show you this thing right here.
Okay.
These are all on, these two are on 50 tick range bars. And one thing I will show you is this. I put this is my time frame. I'm in Seattle, so 6:30 to 8:30. So I set it to only give me signals during that period of time. And anyway, so I don't have to trade this many contracts, but it's going to give me signals for that many. You know, I might say, well, I only want to trade one contract, but I got the signal. Okay, that's all I need is a signal. So this is that top chart here. And you can see right here, this one here, the bottom one, it showed it, it started out with shorting 10. It got rid of 8, and the bottom it says covered 2, but it covered it at the same price it entered. That way I don't have a big loss. It's, for me, it's all about protecting profit as much as I can.
Okay.
And so this is a 2-hour period. And this is I wish I could, how do I get that back up there? I know it went up a couple times.
Okay, another question was, how many signals per day?
Well, in the 2 hours, there could be, I mean, there could be 20, 30, 40 signals. Depends on the size of the chart you're trading. I trade 50 tick on the ES. And when I trade the ES. So, well, look at this. This is 6:30 to 8:30 just on the ES alone. 1, 2, 3, 4, 5, 6, 7. Then if you consider the other, you know, here's the NASDAQ. 1, 2, 3, 4, 5, 6, 7. That's 14 trades, potential trades, you know. And if I'm just scalping, I'm normally just taking that first exit. You know, I want to keep things as simple as possible. And the older I get, simpler is a lot better. And one other thing here. Well, I'm not going to get into that. This thing right here, the second one, I'll show you here. I don't know if you can read this. Standard 1, Bizarro 2. My standard, it's just like you normally think. Like this top one here on that candles, this is my Bizarro code. So that would be 2. I'd have 2 here. And I'd have 2 down here for market to do a market order, you know, limit in, limit out, market order in, limit out. Okay. But the second one down, that's what that was based on. This is strictly standard, and it's still market order. So it's, you know, but this is standard. You see, this one had a signal here, but this one didn't. And I'm going all over the place here, but
Okay,
you know,
can we
I'm
get
sorry.
back to some of the questions? Because you had a lot of them.
I'm sorry.
Okay, good questions are good. Let's
I'm
see.
sorry, I talked too much.
I said, okay, so from Joan says, yeah, I guess I'm a little confused. What exactly is your algorithm
looking at,
okay, and how or what can someone who does not have your algorithm look at on a plain chart? Is the signal possible to see without using your algorithm?
Well, that's the thing on, it's just like, let me get rid of this. It's just like this. This is still, all these years, this is still my favorite setup. And because all I care about, you know, the algos are for my big money people, okay? But I love trading this because the older I get, I want to keep my brain as active as I can. And, you know, it's getting worse, but I love looking at this. And just like I pointed out, you know, if it comes down within 3 ticks or goes up within 3 ticks of resistance, then I take the trade. This is simple. You don't even need the bottom thing here, you know. All you need is this one, just one chart like this. I use, and by the way, here's another thing. You notice this was on the open of the bar, this line. This one here was on the open. You know, I didn't put it on the wick like a lot of guys do. This one here is on the wick. I mean, on the open. I didn't put it on the wick. And I find this to be a lot more accurate for me. anyway,
Okay, so getting back to the questions here,
I'm sorry.
I'm not sure if Joan's question was answered there, but okay, so why do you I guess why do you use range bars, not time-based bars?
I've used time base in the past. That's what I started out with. But I just like the range bars because except for the end of the day, they're all the same size. And I just like that. I just like looking at it.
Okay, all right.
I got right. Where was it? Okay, let me see what this top one is. Okay, let me just change this for the heck of it. Okay. Ooh. Okay, I'm going to put this on a minute type chart. Okay, I'll put it on 30 minutes. How's that? Okay, and now I got to do this one. This, you see the candles, how thick they are? And then I do the other one on the bottom there, 30 minutes. It's just something I made my own candles. I didn't like the other ones. And so now you'll see they'll be all thinner. Okay, this is totally different than a range bar. You see how different size candles. Now, this is still turned on. I haven't changed anything. Just the time it's going to be in. Now, I don't know if it's going to be winning or losing. This might be the wrong code for this one, but and I can't change the code. I can't put a bigger stop in it or anything because there's nothing to change here. So we'll just have to see. Am I like, I thought I had one. Oh, here it is right here. There you go. And let me see if that's the same one. No, it's a different one there. Okay. And so here's the 30 minute. And I put 1 minute, 2 minute, 3 minute. These are all the NASDAQ. There's different ways I can set this up. Instead of the NASDAQ, the ES, the Russell, and the Dow, I just made them all NASDAQ, different minutes. Okay. And again, no back testing or anything. So let's see what the results are. I'm just going to bring it down here so I can have a little. So here's the results right here. And again, I took this one and I said, okay, I'm going for 3 ticks here, 6 ticks there, 9 ticks here. That's 18 total. So I put a break even of 17. If it goes up and doesn't take these 3 out, I mean, it might take this one out, and it might not get to this one to take out, and it backs up to where you entered, then it'll take it out at break even. And this is how I save myself from a lot of big losses. And let me see what the biggest loss here was. I did have a pretty good sized loss, $1,539, but I also had a big win. Okay, the average win loss was only 2.5 to 1, but the average win was this. The average loss was this. And so you
Sorry
see
to interrupt on the. So for us to do it on like Thinkorswim, we would have to manually put in those kind of like trailing stops to get each of those 4 points or profit takes, right? And then you're putting them in as just price targets, actually, right? Is that what I'm
yeah, they're
understanding?
just price targets. That's all they are.
And then if it doesn't hit one and it goes back to break even, you just flatten out.
Right. Now look at this one here. Can you read on the little window? It says short 4, cover, cover, cover. So it shorted at 8.25. It took first out at 750, then 525, and then 2 contracts back. When it backed up, they lost at break even. So all I lost is commission. You see?
Okay, wait a second. Actually, so if it goes through the 3 and it goes through the 6 and it goes through the 9, and then it pulls back, then it triggers to sell them. So you get the chance. You don't just hit each profit target then.
Right. So yeah, it's all about backing up. So many ticks there, and it backed up, and it just took itself out. And now you see here, sometimes you can get a runner, and so here it got out with 3 different contracts, then had the runner up here.
That's
But
great. I think what I find I have a hard time with in like Thinkorswim is you can't capture like that. Like you have to put in a trailing stop at each price target, which is kind of cool.
I've never tried Thinkorswim. I know a lot of traders that use it, but you know, and it does have losses. And I try to keep my right here, it's 2670. That's fairly high. I try to keep my drawdowns. I just threw this together. There's no back testing, okay? And anyway, I want decent result here. And let me see right here. So this is the results here again. And all I care about is ending that 2-hour period with profit. I might have $10 profit. I might have my net daily goal. I wasn't going to say my net daily goal, what it is, because you wouldn't believe me anyway. But I don't get to trade as much now because I have to support my clients too. And if they got questions. Now this here is limited to 4 contracts. The point is I don't look at indicators. And you remember, I only go back 1 bar. I don't need to go back 100 bars or whatever. The Bizarro code is, I call it Bizarro. Remember Superman? Well, if you're old enough, Superman and Bizarro Superman. Bizarro Superman did the opposite of everything Superman did. And when I came up with the code to do that, this is set on Bizarro right now, and it's set on the market order. Anyway, when I came up with that, like I said, I put it aside for a while. It's like I screwed up my code. Well, my screw up was the best thing I ever did. And once I started using it, it's like, I don't care. It's whatever. I found out, I figured out what I did. I kept looking at the code. And it's like, oh, okay. That's what I did. And I'd like to tell you I'm a genius, but I screwed up and came up with the best thing I ever did.
So it's interesting that when you don't use your range bars and you actually use the time bars, how accurate I want to say, or how on point it is to find the opening of the candle.
Well,
And
it does
yeah.
It's just okay. Let's I don't want to change this one, but well, this is
We're used to, I'm not used to seeing your range bars, so these bars make more sense, but it just seems like you've gotten to a evolved point that you don't need to see the bars, you just need the range.
Yeah.
But it looks interesting to me.
I could change anything I want. Okay, these are all in the NASDAQ, and I think I put them all in the NASDAQ, yeah. But see all these 1 tick. This is a 10,000 tick bar. 1 tick, 2. I'm looking at all these here, up to 7 ticks. Now this one down here is just to make my candle. I got this one and this one just to make the candle look like it does. Okay, but you know, I could put anything in here. Now, if I put 1 for standard, and then I put 1 here for market order, I would have 0 here. And that would be a standard like you normally think. You wouldn't be getting in like these, you know, how did it know to go short here? And it did go down. I mean, it's not perfect, but you know, I had 3 red ones here, had 4 red ones come up, and all of a sudden it went short. And that's that Bizarro code that I accidentally came up with. I'm not a genius.
Aside from the slippage and, you know, if you get wicked out, it's pretty accurate though, right?
It's very good. It's I'm not trying to brag on myself, but just
it's no bragging. The code, I mean, you're showing it.
Now what I want to show you here, this one, okay, this one right here, okay, this is a 10,000 tick bar. And so you see I have the 17 tick break even in there. Okay, BE break even. So it'll try to get these, but if it backs up after these, then it'll break even without getting a big loss. That's what I'm trying to prevent. Now the bottom one, I didn't put a break even in. I left it the same as my disaster stop. My disaster stop is here. Here's my break even. Okay, everything else is the same. Okay.
So for that one, are you trying to capture more, or you just?
Well, here's what I want to show you. I just left it like that on purpose, you know, and if I have a big loss, I have a big loss, you know, But this is what I wanted to show you. Everything else is the same except for the break even. Now look at the results in this. Same time period. And actually the gross loss is better than this one down here with the break even. It's the same size chart, same everything.
One of,
Go ahead.
question, we could still got a bunch of questions there, Bill.
I'm sorry.
I
About,
think he's answered a bunch of them along the way, though. Don.
okay, one of them though is from Kevin. This is, how do you focus on that many markets on that time frame?
Well, basically what I do is I only trade, this is what I do right here. I don't look at a lot of markets. I mean, I've had the ES, the NASDAQ, the Russell, and the Dow, this set up before. But right now, I just mainly focus on the ES and the NASDAQ. But I just line these up like this, and I can see a signal here. You know, it's not that hard. But again, I'm a scalper mainly, and mainly I'm going for that first exit. You know, however many contracts I have, I don't care. My objective is to get to my net daily goal. It's not to see how many trades I can do. It's not to get in a runner. I mean, sometimes I can get into a runner, but it's to hit my net daily goal. Now here, you see here on that bar, it only got rid, it only got rid of 5 contracts because there wasn't enough room on that bar to get more. And then it went to the other bar, it opened here, and it got rid of down here. So it did pretty good on that. So sometimes I get a runner too. This one here got rid of 5 contracts and broke even on the rest. It's all about protecting profit. And again, I like range bars, but like I showed you, it doesn't matter what type of bar you use. Yeah. Anyway, but this thing down here at the bottom, I mean, it doesn't have a good winning percentage. What you'd like is, I think it was 41%, but I mean, I like them, gets down to 15, 20%. But when it does win, it usually wins big. Okay. And this bar, again, this is 25 tick range bar, by the way. Okay. But if I know what the market is doing, I'm looking at the overall market. So yeah, I got 4 different instruments here. And I'm looking at the overall market to get into the trade, and whether it's long or short. And this one here, I don't know what it is. Oh yeah, that's a 32,000 one. But I'm talking too much, ain't I?
Yeah, we have to wrap this up here. We're over 20 minutes past.
Oh, sorry about that.
Past the hour there. So
Anyway.
Let me thank you for making your presentation, although you weren't feeling all that well, but you seem to do a great job. So I think you're.
Well, thank you. I appreciate it.
Can you put your information in chat by chance if we're allowed to reach out to you or not, or tell us a little bit more?
I don't care if you reach out to me, but that's not the reason I came in here. I don't want, I'm not looking for business, but if somebody needs help, I can give a certain amount of help, I'd be glad to, but that's up to you guys, that's up to the group there.
Well, put your email address, or
you have it anyway. So.
Okay. All right. Drew, I'll send you his email address.
Or if he's on all the time, I'd rather the group be exposed than just me. We all have the same kind of goal and questions.
All right. You guys are welcome to come in and watch.
You sick, Bill. You're great.
Yeah, thank you.
Oh, you're welcome. More than welcome.
Okay.
Anyway, have a great rest of the weekend.
All right. I guess we gotta
stop share there, right?
So
okay, I'll stop.
Stop.